Hey guys, welcome back to another week of Mortgage Matters in Minutes. I'm here, Brett Rasmussen, sponsored by Mortgage Specialists, here to talk about this week, is homeownership a good investment? That's a common question we're getting here very much lately with the home prices increasing. And many people are thinking we're due for a massive crash or we're due for some issues that we have seen back in 2008. So let me get right to the answer. Is homeownership a good investment? The simplest answer I can give you is yes. It always has been. It always will be. But again, when we look at home ownership, most people are going to look long term, not short term. And so a lot of people are looking for, hey, what's my rate of return on my house over the last year, 2 years, 5 years, 10 years? And they might even look at 6 months, 3 months. They might look at homes as a stock price or as a bond price or as a mutual fund, looking at what's my rate of return over the short period of time. Well, when I educate clients and speak with clients, I'm always talking about homeownership as a long-term investment because that's always the way it's been. So if we look at homeownership values or the investment of homeownership, or we look at the stock market, I like to compare it to, we're always going to see a rate of return going up. We're always going to see the values go up. Will we see some dips along the way? Of course we will. With any investment or any asset that's out there, it's not going to always be a straight line. We're not always going to see values of homes go up completely. We're not always going to see our stock prices go up 100%, but over time, if we look at a long term, it is a good investment. So let me give you some more statistics, not just to believe me, because I am one of just many people that have different opinions of values about what is going to occur with housing. But housing has always created wealth over time. We can look at that from values of what they were 5 years, 10 years ago, or 50 years ago. We do know the wealth builds, and there's lots of statistics that show that real estate hedges inflation. And if we look at the time of where we're at right now, inflation is rapidly increasing. But housing over the last 100 years have beat inflation and the rise of rate of inflation. So when people are talking about rates increasing due to inflation and this market that we're in, home prices are going up rapidly, as we've seen, to keep up ahead of inflation. And that's one of the things that we're seeing on a regular basis. But one statistic that we really found very, mind-blowing, I guess, is the discussion about what is the net worth of individuals that are homeowners compared to renters. And the Federal Reserve does this statistic and study every 3 years. It's called the Survey of Consumer Finances. And what is stated, the last survey that was done in 2019, is that the average individual in 2010 had about $198,000 more in net worth than a renter does. So in 2010, the average net worth of a homeowner is around $198,000. The average net worth of a renter was around $6,010. We fast forward to 2019, the average net worth of an individual of a homeowner was $249,000, and the average net worth of a renter was $6,270. So $6,000, $210,000, or $200,000, $250,000, to round up. We've seen a 25% increase in net worth between an individual that is a homeowner versus a renter. And that's put out by the Federal Reserve. You can look this up, the Survey of Consumer Finances, one statistic that's done. Another statistic that is put out as well is the average credit score of a homeowner, according to Experian, is a 731. An average credit score of a renter is 638. It goes to show there that usually homeowners have a better savings rate, and also home ownership creates your own savings plan. Because even if you just make the minimum payment on your mortgage, generally over time, your value is going to go up. But what's also going to happen, your home mortgage or your balance on your loan is going to go down. So as values go up, balance goes down, you're going to see that greater net worth of assets. Again, homeownership forces that savings. It's an asset you can turn around and leverage down the road. 10, 20 years down the road, you can use and borrow against it again to do something additional, like pay off bills, finish your basement. Obviously, we see people leverage against their home for reverse mortgages to pay for retirement, things like that. Also, with the fixed rate mortgage, it hedges against inflation, so it keeps your principal and interest the same. We do know that taxes and insurance obviously continue to go up generally with time, but your loan payment itself stays the same. Where what we've experienced for many of our clients is that they're saying, hey, my rent's going up and I can't afford it, or rent's going up, why don't I just buy a house? But that's also expensive as well. So as we can see, inflation is not only hitting the home ownership market, but the renter market as well. It obviously allows you to build credit over time. The better you pay your mortgage off, the better your credit score gains as well. But again, as we talked about earlier, homeownership increases and we see usually massive appreciation over time. The last thing homeownership gives you, obviously, being a good investment, it allows you to build your family home. It allows you to have a safe place to go every day to. And that's an emotional aspect that I don't think you can ever put that into a valuation, that people own homes because they want to develop a sense of home ownership, of not in the word home ownership, but something that they know is theirs, a place that they can go to where they feel safe. And we've seen that happen massively over the pandemic, over the last couple of years, that people flock back to home ownership because they spent much of their time at home, and that sense of being, of where they lived at, was a more of an emotional aspect, not just necessarily a value or an investment number that they necessarily wanted to contribute to. So to kind of wrap up this discussion, is home ownership everything that you want it to be? Is an investment part of home ownership? Is it a good time to buy homes? Is it a good time to be a homeowner? I will always say yes. I will always statistically state that over time, homeownership is still a great investment. Can we get a little nervous right now and a little shaken up or a little upset because values have gone up? Sure, we can. I mean, obviously, as the price of home gone up, that makes your payment even higher. But what we generally like to explain to our clients is homeownership isn't for everyone. Maybe now is the time for you. And usually what we like to educate our clients on a few different things. If you are stable with your income and your assets, and you plan on living in a certain place for a long period of time, and you have a credit that's established, and you're ready for additional responsibilities, homeownership is great for you. Many people don't like homeownership, and it might not be good for them because they don't have the assets set aside for the down payment. They don't have an emergency fund set aside. They're not stable. They might be moving across the country in 6 months or 12 months. Again, if we see those particular things occurring with an individual or a borrower, we might tell them maybe homeownership isn't a good investment for you. But for the people that have a stable income, that have a stable location they want to live, such as Omaha, Nebraska, they have a credit established and they're ready to take on maybe taking care of a home on top of the minimum monthly mortgage payments, then of course homeownership is for you. Again, back to the original question at hand, is homeownership a good investment? Yes, we can prove that statistically that it always is. Even though right now homeownership and home prices are at nearly all-time highs here in Omaha, Nebraska, or really are at all-time highs in Omaha, Nebraska. I don't have a way exactly to calculate that, but I do know the value average sales prices is the highest we've seen. And people get nervous when we see the highest of anything. We're at the highest stock market, people get nervous. We're at the highest gas prices, people get nervous. It's an emotional aspect of being human. And when we see that emotions kick in, we might not always make the most logical decision. Back to the question, is homeownership a good investment? Logically, it always has been and it always will be. So, is that deterring you from purchasing a home this year? Possibly. Should it for years to come? Never, because we're going to see some ups and downs with housings, just like we've seen in the stock market. But over time, homeownership has always been a good investment. Thank you guys again for sticking around and listening to us today. I hope you gained some information, some knowledge. If you would like to pass on this information to other individuals, we'd love for you to share these feeds. Like us on Facebook, Instagram, and come check us out weekly at 3 p.m. on Tuesdays here for Mortgage Matters in Minutes. You can also check us out on our website at mtg-specialist.com or phone call us at 402-991-5153. I hope you all have a great rest of your day. We'll talk to you here next week. See you soon. Mortgage Specialists. Driven, trusted, reliable.